Hey Derek, thanks so much. Well, in today's Money Tuesday, we're talking about ways to help your parents' retirement income. Stewart Welch joins us this morning to explain. Hey, Stewart.
Good morning, Janice.
All right, on the outset, people may go, what are you talking about? So what are you talking about?
Well, you know what? You've got lots and lots of retirees who are facing devastation in terms of rates of return on anything that is paying interest.
Yeah, they don't have those years. They're already in their retirement days. They don't have those years to let it build back up, right?
You know, and historically, interest rates have been around 4.5 to 5.5%.
Right.
Now, money market's under 1%. A 10-year Treasury is paying 2.6%. So they have been devastated from an income perspective. And there are a lot of adult children, you know, children that are in their 40s, children that are in their 50s, that are in a position to actually help their parents.
Okay, how?
Well, here's the one thing I would say first is that virtually every time I talk to somebody who's a retiree, the number one thing they'll say to me is, I don't want to ever be dependent upon my children for financial support.
Okay.
So they won't take a handout. So here's how they can do it. They can do it with what's called a private reverse mortgage. So a reverse mortgage is where instead of you paying down a mortgage, the mortgage company is actually making payments to you, and your mortgage balance builds up as they continue to pay you money. In a private reverse mortgage, the child actually becomes the lender, and they can pay their parent like an income. They could pick the amount, say it's $300 a month or $200 a month or $500 a month, whatever that is, and they actually create a contract with their parent where they actually create a mortgage against the home, and they're making payments to them, and they're required by law to pay to charge a certain interest rate called the applicable federal rate. Right now it happens to be really, really low.
Okay.
At the point where the parent moves out of the house, either because they pass away or either they move into a nursing home, at that point they'd sell the home and then actually retrieve the money that they had loaned their parents. So it becomes a contract between the child and the parent.
Now, I had heard of the other one where you'd have to pay back the mortgage company when you sold the house, but this, you're paying back the child who's been able to help the parent, right?
And you know, the child is actually receiving the interest, typically maybe more than what they would be receiving on their money just sitting somewhere.
Okay.
So it's one of those situations where, you know, everybody can win. The one caveat would be a lot of times one adult child is in a position to help and maybe some of the other adult children are not.
Right.
You need to be sure there's a lot of communication there so that there's not conflict among the siblings down the road.
Okay, so final note here, what do they need to know? How do they approach this?
Well, the first thing is to decide whether this is something that might work, and then what they want to do is get with a financial advisor, an attorney, an accountant, someone that can help them just walk through the transaction. You do need a promissory note as evidence of the transaction for some legal reasons, but it's not that hard to do.
It is a contract.
It is a contract,
okay.
And it's a way that, you know, the parents can accept help without it being a handout.
All right, very good. Thank you so much.
Thanks, Jan.
It's good to see you. All right, still ahead this morning, a fun